we're going to be like $1 million around 2033 and $10 million in 2045. Remember, not your keys, not your coins first and foremost, but these treasury companies can access cheaper capital than, let's say, you and I can as individuals. That's the arbitrage, right? Like, I see it like this is a fiat regulatory arbitrage that exists between now and hyper-Bitcoinization. And that may be 20 years out, it may be 30 years out, none of us knows. And so it's decades out from here till hyper-Bitcoinization is my view. And there will be bull and bear cycles on the way there. And people should understand that treasury companies are not the same thing as Bitcoin, right? If you're buying these things, you are buying equity or debt of a treasury company, right? So it's important for people to understand. Obviously, I know you come from the accounting world, just as I did. So we understand the difference between, you know, what is Bitcoin versus what is equity, what is debt. But as long as you're clear about that, I don't see an issue with that. I think, yes, you should be aware there are additional risks that you are layering on. You are taking management risk. There's custodial risk. There is, you know, government seizure, capture risk. Like, of course, there are these risks. But also, we have to step back and think, how and why are they outperforming Bitcoin? At least, yes, I understand it's not the same thing as controlling your own keys. But how are some of these companies outperforming Bitcoin? Well, it's because they can access cheap capital. They can access either cheap debt or cheap equity and buy Bitcoin. And if they even, you know, if they can effectively borrow at 0% and buy Bitcoin growing at 40% per year or 30% per year or whatever, it's a no-brainer. And so the challenge is these public companies especially can do things that you and I as individuals can't do. And that's kind of the bottom line. Now, I understand some of the criticisms, some of the arguments are, well, are they being missold to people or mismarketed to people? Or they talk about BTC yield, but you can't withdraw that yield. But the way I would see it is like, you wouldn't say, oh, fiat stocks are a scam because you can't just instantly withdraw all their earnings. Well, no, that's the decision of the company. Are they going to pay out dividends or are they going to reinvest? Are they going to, you know, it's corporate governance, corporate finance. This is how businesses and finance work. Obviously, I understand you get these things, but just kind of, I think there are people who maybe they've got the wrong message about it, about what this is. And so they are reading it like these Bitcoin treasury companies are being marketed as Bitcoin themselves. And okay, yeah, sure. I'm sure you can find some, you know, treasury company investor who's maybe saying it wrong and saying, hey, they would rather hold, you know, only treasury companies and not hold Bitcoin at all. I think that's a mistake, obviously. I think, you know, you should hold Bitcoin. And I think that's the smart and prudent thing to do. But everyone has their own choice to make about whether they want Bitcoin treasury company exposure. And there's different reasons for this too. Because don't forget, there's this concept of trapped capital, right? There are people who want Bitcoin exposure, but they can't buy it themselves because of mandates, because of regulation, because of taxes. Maybe it's a tax advantage treatment. That's one thing. And then the other thing is not everybody wants exactly spot BTC exposure. Some people want less risk and less return, and other people want more risk and more return. And so those people, if they're comfortable with some form of equity or debt exposure instead of just, you know, Bitcoin in my cold card or in my multisig, then so be it, right? Now, the caveats I would give though is Bitcoin is safer, right? Holding Bitcoin in your own custody is, in my view, the safest play. But is there a role for people to use equity or debt? And if they understand that they want a different trade-off of risk and return, then so be it, right? And what I would say, to be clear, I think there are different arguments about exactly how much of a premium to MNAV is sustainable, right? I think some level of premium is justifiable based on the regulatory and tax arbitrage. I think there is some justifiable level of premium. Others would disagree. They would say, no, it should actually trade at a discount to MNAV. And they would have that argument. Or others have the argument of, well, look, people can get wrecked. The equity holders can get wrecked in a bear market. Absolutely. Like I said, it is higher risk, right? Because there is a scenario where maybe there's kind of like dominoes collapsing and falling, maybe in a Bitcoin bear market. Maybe not now because we're in a bull, but maybe if we went into a bear cycle, could a bunch of these get wrecked? Could there be a big MNAV compression? Could the equity holders get absolutely rinsed there because they took a big equity drop in the value of their equity and Bitcoin is down? So cumulatively, they might be down like massive in terms of like double whammy how far down you are, right? So understand the risk, but there are some people who want that risk because they believe it gives them a higher return. So that's kind of how I would summarize it. I think it is a trend. It's a phenomena that we have to try to understand. And I believe it will help facilitate more people to come in and start getting some Bitcoin exposure, even if it's not the ideal, not your keys, not your coins exposure.
Yeah, I really wonder how much of the fervor right now is from people who are trapped, institutions, entities, individuals, and have nothing to do with Bitcoin. And they see this arbitrage opportunity because it's either they understand that it's powered by Bitcoin, and even though they don't have any, they can get a security. They're in Japan. They have a better tax situation because they could buy non-spot Bitcoin, versus the Bitcoiners who might have either, for some reason, either have money to invest in the stock market, or already do, or have themselves money trapped, or their wives or husbands like securities more than Bitcoin, and it's a nice addition to the portfolio, and are seeing this early, and they're the push behind this fervor. Is it truly, pensions and people in Japan who have no idea what Bitcoin is, but they see Metaplanet and they understand the advantages there just from an A/B test? Or is it people in, all around the world who are like, I can invest in Metaplanet before that arbitrage opportunity that gets bigger or smaller? I'm not sure, but you know what I mean?
Yeah. Well, I mean, it's a mix of things, right? So some of these people are people who came in from the stock first, and then they learned about Bitcoin, and then they, got a cold card and all that. There are other people who came at it from, they were already like a maxi. They already had, their cold card or whatever. They already had their hardware wallet, but they see this as like, this is a risk on play, right? Like Bitcoin is a savings for them, and Bitcoin treasury companies are the investment for them because they believe it can outperform Bitcoin. And they want to try to sell, they believe that if they kind of invest in these treasury companies, that they can outperform Bitcoin and then maybe later sell some of that back into Bitcoin. Now, on the good side, it's at least not supporting a shitcoin network effect, right? Like, I think Bitcoin treasury companies support the Bitcoin network effect. So I don't see them as shitcoins. I think shitcoin treasury companies are shitcoins, right? Like I think there's like an Ethereum, there are some Ethereum and Solana treasury companies, obviously, have fun, stay poor. I don't think that's going to work, but, people are going to do what they're going to do. And so I guess to answer your question though, I think there are a bunch of hodlers, especially like, as an example, I know in the UK, there are, British people, Bitcoiners who they already have Bitcoin, self-custody, but their retirement accounts are trapped. And so I think it's called SIP accounts. And so some of them are like buying MSTR in those accounts. And some of them have done really well out of that, right? Because, they weren't able to buy Bitcoin or Bitcoin ETFs. So they went for the equities. And so that was a play for them. That was like an arbitrage for them. And in other cases, like you said, maybe it's their family and friends who maybe aren't comfortable self-custody Bitcoin, but they might be okay with equity and debt. So I am, let's say, constructive. I'm supportive. I think this is a trend. It's going to help funnel capital into Bitcoin. Some of these people will then go on their own rabbit hole journeys as they kind of buy the stock and see it go really well. Now they'll start learning about Bitcoin, and they can also learn to self-custody and do all these things that we talk about, like running your node and all these things, right? And so I think, I'm supportive of this trend, but I would just say, obviously, it is more risky than just self-custody Bitcoin, right? I think you just got to be honest and honestly speak about the different risks of these different things, right? There's self-custody Bitcoin versus treasury company equity. And even in the world of treasury company equity, there's like MSTR, which is sort of like the blue chip now, right? Because they're so big and they've got a huge stack and they're very, they're building out their own, let's say, risk curve, let's say, of Stripe, Stride, and Strike, these preferred shares. So, and then so that's at one level, and then you've got like, Metaplanet, and then you've got others who are like really, early in their journey. And so the earlier in the journey, the higher the risk. And if you are okay with that, then so be it.
Do you think that these become sort of a pure play long term, where you'll always have gold miners, right? So it's basically a gold company is an acquisition company. They're mining fiat and trying to turn that into gold to make money. do you think that these companies become, we get a new Magnificent Seven, a new kind of FANG where, these are the top companies at mining fiat and this is what they do forever? Or do these companies have to morph into something where they acquire enough Bitcoin and they need to figure out either how to financialize the holdings, or, does every company with an operating company that has a positive net cash flow just absorb these companies? And you already have treasury departments at every fiat company in the world. Would you just have a Bitcoin treasury department at every sort of profitable company, and this sort of thing goes away or gets absorbed?
That's a harder question. I think none of us really knows the answer. That's probably another open question, right? Because certainly you and I and probably all the listeners today, we would all say, everyone should be holding Bitcoin. The question is, should you be engaging in this kind of the debt and the equity and that aspect of it? We don't know. Like, maybe there's only a market for the top few in every jurisdiction, maybe, and there might be like kind of Pac-Man acquisitions of, so they might acquire each other in the bear cycle, right? Because maybe one of them will have a lower MNAV and some other one will be like, hey, let me take out some debt and acquire that, and that would be accretive to my shareholders. So, who knows, right? We might see that. The other trend is kind of what happens to the Bitcoin price over time and what happens to fiat over time. So coming back to what I was saying, now, of course, there's different worldviews out there, but I'm going to say my worldview, what I think. I think this window is open from now until hyperbitcoinization. And as we approach hyperbitcoinization, the window starts to close a bit. And so then, maybe MNAV will compress back. Now, I don't know for sure, right? Because you could argue, look, just like some of these companies today are trading at very big multiples, right? Because not everything is for sale at once. I think that's important because, and I've spoken about this before, like in response to even Knut Svanholm's infinity over 21 million thing, right? Because I've said, look, one of the reasons is if you think about the accounting valuation, it's very well possible that global assets are worth more than 21 million Bitcoin, even, post hyper-Bitcoinization, right? Just based on the accounting, right? Just valuations, and that's just what they're worth. And so could some of these treasury companies still sustain some MNAV greater than 1 based on how they acquire Bitcoin? Yeah, maybe it might be possible. I just don't know. Like, I think that's the open question. And so the way I see now, there's different worldviews, right? There are some who think, no, fiat is going to be around for a while, like, hundreds of years or maybe 100 years more. And therefore, they're just going to keep, these treasury companies are just going to keep on, they're just going to keep accumulating Bitcoin. And every time a fiat currency collapses, they'll just spin up a new one, right? Now, that's not my worldview. My worldview is more like, no, actually, after a while, the world is going to hyper-Bitcoinize. Like, people will eventually, for the most part, now sure, there might be the monetary North Koreas of the world, but for the most part, the world will go to a Bitcoin standard where we earn and spend Bitcoin. And at that point, what happens then? My worldview is the cost of government fiat debt rises such that this arbitrage window closes. And then it just becomes about like, how are you operationally as a business, right? Can you earn Bitcoin? So I think what happens over time is more and more people go to Bitcoin. Less and less people want to just hold pure fiat bonds, right? Because I view that as kind of just bag holding for the government, because these are the ones who are getting debased, right? Now, they may have their own reasons for that, but I think they're all basically getting debased. And over time, there'll be, especially as the generations go and shift, there'll be more people who are just digitally native and just use Bitcoin and don't worry about holding fiat bonds. Why would they hold fiat bonds, right? But it's a slow shift. So it's not happening tomorrow. I see this as like a multi-decade thing. That's kind of how I see it playing out, but none of us really knows.
Yeah. What about proof of reserves with corporations? Do you think they should?
Well, I mean, it's nice. Obviously, it's a good thing if they do that. It's definitely I'm in favor of that. I can understand it's not just kind of slam dunk though. Like, I can understand there are arguments against it because of things like privacy as an element, as an aspect of, like, let's say if you're an investor in one of these companies and there you go, full proof of reserves or show their addresses, does that dox investor coins? right? Like if you contributed coins into that company, right? Are you now doxing your own stack? And it kind of gets awkward. I think likely, yes, I believe that is the trend. I believe that is the way things will go. Like I know Metaplanet and some others have taken that step to show, and Bitwise, as an example, as an ETF provider, not as a treasury company, but they are doing proof of reserves. It's a good trend because that would help stop fractional reserve practices. So I think on net, I think it's likely to happen, but it's more like it's a matter of time.
And I got to ask, what do you think about sort of government adoption of Bitcoin? We hear strategic Bitcoin reserves. Governments are not going to sell their Bitcoin, or they're going to acquire more. Are you, as a libertarian, as Stefan Lavera, are you excited to see governments adopt Bitcoin? I know we could argue it's inevitable, but
yeah, I don't know. It's kind of I've honestly gone back and forth myself on this. Like sometimes I sort of think about like Pierre Rochard's sort of argument of like, well, hey, it's eventually they're taking away seigniorage from the state, so that's a good thing, right? And or if you look at like the arguments of like Giacomo Zucca, right? So he might make an argument that it depends on the state, on the kind of state. Like maybe you like the idea of like a small state holding Bitcoin because it allows them to protect themselves against larger states. So I don't know. I think it's a complicated question. Will it help advance Bitcoin adoption? Probably yes, because there's a lot of normies who just kind of look at what a government does and think, okay, well, it's good enough for the government, it's good enough for me. So we'll probably see that. I think from the principled stance, okay, like better to focus on things like taking away capital gains tax or taking away regulation, focusing on stopping AML and sanctions laws and abolishing FATF. Yeah, I mean, if I could wave a magic wand, I wish we could like abolish FATF and go against AML and sanctions regulations. I think that would really enable, people to really use Bitcoin. But yeah, I don't have a strong stance on like, am I in favor of the state doing it or not? I don't really have a...
What if Australia came out and said they were stacking?
Well, I mean, in some ways, yeah, that'd be good because maybe it would mean in the future they could lower the taxes or whatever, or they could, slowly be treated more like a service provider as opposed to our owners or rulers, right? But it's kind of a complicated thing because, people also control the state, right? Through democracy and things like this. Like, obviously I'm against democracy, but that's, this is the world we're in. So it's a complicated thing. I just think we're better off just sort of advancing this idea of like flag theory and sort of treating states like service providers to make them compete with each other, right? Because the more people who do that, it becomes more like a privatized, kind of more like a, private governance, which is more aligned with how, let's say, we as libertarians might see it.
What about sort of, you mentioned before that you still think or see cycles playing out, it sounds like.
Yeah.
So do you see, what do you see for this cycle? Do you see corporate treasury adoption and nation state adoption leading to smaller cycles, meaning smaller drawdowns, maybe less peaks? Or do you see it as just bigger peaks and bigger drawdowns in the future?
I would say the most likely is that we have this kind of decaying peaks. So the peaks aren't as crazy, like the run up. Like basically, I think nowadays I'm looking at the power trend, power curve, power law, whatever you want to call it, and seeing it like diminishing returns from a percent perspective. But in dollar terms, that's still huge, right? Like it's going to be big. So even on the power law trend right now, it's probably like 40% a year and slowly tapering down over time. But some years it might more than double and then, have a bear cycle. And if you kind of average it out over time, like on that trend, I think it's like we're going to be like $1 million around 2033 and $10 million in 2045. So I think that's about the ballpark. So will we see drawdowns that are more muted than before? Yeah, probably, most likely, right? So as an example, if you look at like past drawdowns, they might have been like, I don't know, 85%, 80%, 75%, maybe, who knows, maybe it's going to be 65% next time. I don't know. So I do see these cycles continuing. Sometimes it's because of leverage. Sometimes it's just different things are going on in the economy around the world. And so that could happen. And, maybe the treasury companies, like maybe it's not MSTR that gets in trouble, but maybe some newer one who takes on worse credit terms because they're trying to very aggressively stack sats to kind of, to try to attract attention. And maybe they take really bad credit terms. And then maybe that's what causes them to get wrecked because they got liquidated, or they had to, not liquidated, but they had to sell at a bad time, or, you know, maybe there's like a cascading factor there. I mean, none of us knows, right? But that's kind of like, you know, maybe that's one scenario of how it could go down. But short answer is yes, I believe it's diminishing returns from a percent perspective, but still very high and greater than the level of fiat inflation and greater than what you'll see in other assets. And then also, because that it's kind of the diminishing returns over time, I think that will also entice or enable, in a way, new pools of capital and new people to come into Bitcoin, right? Because now it's not so crazy volatile like it was like it was 10 years ago, as an example.
Yeah. So, I mean, you mentioned sort of, what did you say, million in 2033?
Yeah. So I think the power trend or power law curve, it sort of puts you about there. Now, there can be kind of like the advantageous part of the cycle where maybe we hit it a bit earlier because of the bubble or whatever. So maybe a little earlier, but kind of the trend puts us around there, 2033.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.